You may have heard this term infinite banking and find that it's often linked with life insurance. But did you know there was a way to use the same strategy without paying life insurance premiums? My name is Paul Vasquez with Tax Lab. We help people save tens of thousands of dollars in taxes and increase your wealth generating opportunities. So, when I was in college, I also started learning about this infinite banking process as I worked for a life insurance company. I had my Series 6, 63, life, health, all that fun stuff. And I learned a lot about the insurance industry and this idea of infinite banking. But I also went to this place called law school and learned even more about what other options are out there that could provide people with the same benefits of this infinite banking idea without having to worry about insurance premiums. This can be also done through a Roth IRA. Roth IRAs are a fantastic way of saving money, letting that money grow tax-free, and then being able to take out that money tax-free. There's no insurance premiums that you have to worry about sustaining. You can skip a month, a year of making contributions, and it's not going to blow up in your face. It's not going to turn into a modified endowment contract. You get the same benefits. Could you take out a loan? Yes, but why would you need to, right? Unless you're using that for personal expenses, which probably isn't a smart thing to do, whether it's insurance or not, you could still take out loans. But the whole purpose of taking out loans against that cash value is that you can utilize that money. You're paying interest. You can utilize the value of your money without incurring any tax liability, right? That's what they're trying to tell you. You don't even have to do that with the Roth. You can take out the principal tax-free whenever you want. Put it back. You can put it back in so long as you do that within a 6-month period. You can take out loans as well if you need that money longer. But what's really interesting is that if you're utilizing this money for investing, then you don't even have to take it out. You can invest within that plan, and it doesn't even have to be just the stock market. So long as it's a disinterested party, you can't you keep it inside that blanket without going through a loan like you would with infinite banking. But you could go straight to that so long as it's a third party or a disinterested party, meaning that you can invest in real estate through self-directing that account. You can invest in businesses, everything else. If it was for you, then yes, you'd have to do the loan route, which you can do. But you get almost all. You can actually get all the benefits of this idea of infinite banking inside a Roth without having to worry about missing a premium or anything like that, without the policy ever worrying about the policy lapsing. You can take time off from making contributions. There are limits to the amount that you can put inside of your Roth IRA annually, but there are also lots of workarounds that you can employ to get more money into there. And the great thing about this, once again, is that you have so much more control. You don't have to go through an insurance company. There's so much more control that you have over that, and you never have to really worry about losing that money to an insurance company if you miss some premiums or anything like that. But I think first, it's not that insurance is bad. It's just that you can utilize other methods to get there. And then once you kind of utilize the cheaper options, which the Roth IRA is far cheaper than running this through insurance, then once you maximize that, if you still have more money that you want to do that and you have a need for insurance, then yeah, you can do that infinite banking strategy through insurance as well. But remember, you've got to keep up with those premiums. And they say, oh, you can miss some premiums here and there and it's not going to affect it too much. Yes, but you gotta really watch out when you're taking a loan. You're actually the insurance company collateralizes your cash value, and they're the ones who loan you that money. There is interest that has to be paid on that, and you have to make those payments back. Same with the Roth. You're going to have to make those payments back if you take a loan. If you take a loan, you have to repay it. I know the insurance companies say, oh, no, you don't have to repay it. Well, you're going to end up repaying it out of your cash value. So, and that could totally liquidate it and end the policy because you've run out of cash value. So if you want to maintain it, it's a good idea to repay it on those programs. But infinite banking is available without insurance. Insurance is good if you need insurance. So make sure the insurance part is really what you need, what you want, and try to get all the low-hanging fruit when it comes to these strategies. It's a lot cheaper, a lot faster, a lot easier to get a Roth IRA than it is to worry about messing around with these insurance companies. And there's no mandatory payments every month or anything like that. So I think you get the same benefits with less handcuffs than you do when you're going through insurance. I think both have value, but I think if you are on the lower income side of things, you can get the same benefits without the higher cost associated with the insurance premiums. Feel free to share this with a friend. I know they do a great job of selling some of the added benefits of these programs, and they're available, but there are some drawbacks, and you should be aware that you can do the same thing without the insurance. Anyways, I wish you guys all the success. If you need help understanding this any further or want to understand how this could apply to you in your life through a comprehensive strategy, go ahead to lab.tax, click on advisory services, and schedule your free 15-minute interview to see if our services are right for you. I wish you all the success.